presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Welcome, folks. It's March 7th. We're going to try to give this a shot. It'll be a totally toned down. Hopefully, I don't put you to sleep, and hopefully, I can make it through the next hour out here. So thanks for joining me. It's March 7th. Of course, this is Steve Rhodes. Might not sound like me. So let's go to the markets right now. Of course, I'd love to hear from you. You can give me a call at 877-927-6648, or you can send me an email, steve@tfnn.com, and inside that subject heading, if you would put radio show question, that would help. And inside the Tigers Den, well, any ping will do. Of course, today it'd be better to have you call, and that way you can do most of speaking. I'll just listen. In any event, let's start with the markets out here. Dow's off about 140 points, about 0.5% to the downside. S&P's off 13. The leader percentage-wise are the transports. They're down about 0.75% out there. So, we should take a look at the transports out here just to get a feel for what they're doing. So let me just switch over to another set of charts out here, because the transports, in essence, have been the weakest indice on the way down. And so it's worthwhile to take a look and see what it's doing. So as we pull up this chart here, one of the things that we know, it appears that today will be that 9th count and that Tommy DeMark set up 9 count. Now, what that is, that's comparing the close of each bar to the close of the bar 4 bars earlier. When you get to number 9, it says pay attention. Actually, when you get to bar number 8, it says begin paying attention. Now, on this chart here for the transports, what you can also see are these red horizontal lines. There's green horizontal lines as well. I just want you to focus on the red horizontal lines. Those are the support levels, and those are established by these 9 counts out here. And so what we can see is because really our role, yours and mine, no matter what time frame it is, our real role is to not get caught up into the emotion of what's going on in the market, but instead to identify where is support, where's resistance, and what patterns are ongoing at that point in time when prices are making lows, and for whatever those time frames are. If we do that, then we can manage the psychology of trading and sit here and interpret the market. So we can interpret them live, just as you and I can go back to the left-hand side of the chart and interpret what happened in the past. So here's what we know at 1:09 in the afternoon. The Dow transports are testing a level of support. That level of support was established by the trading session, the low, the open, both the same in this case here on February 11th. That price point, by the way, is 10,191 and change. We're at 10,180 right now. Today's going to be a 9 count. So if price closes above that level, today ends up being a 9 count as long as the close is not above the close of the bar that's labeled number 5 on my screen out here. What the transports are telling you is it could have bottomed today or maybe tomorrow if there's going to be a change in trend. But support would have held. Now, what happens if price closes below that support? The smidgen that we're looking at right now, to me, is not any kind of conviction. Closing at the low of the day, different story. And then you go down to the next level of support. But you still can't discount the fact that this fulfills, or today appears is going to fulfill, that 9 count. You can't see a change of trend on day 9 or 10, 8, 9, or 10 out there. So the weakest indice out here quickly has made that 9 count right at a level of support. So pay attention. Well, you don't have to pay attention, but I would suggest that you pay attention. So when we take a look at the rest of the markets out here, and when I say the rest of the markets, everything's red, with the exception of the spot volatility index, but it's only up 26 pennies, no big deal. What the spot volatility index is telling us, though, is as we speak at 1:10 in the afternoon, is that it's not above its 50-day exponential moving average. So for those of you that are saying the market is going to crater, you may be right. But what I would share with you is that the cratering impact or effect really takes place when that spot volatility index is above its 50-day line. It's 50-day exponential moving average. That's at 17.19. You're at $16 right now. And the spot volatility index below 50-day just tells you about a sense of liquidity that exists inside the market. Now, and that's the bottom panel of the screen that you're looking at. Now, since we're also looking at this screen here, which has got the New York Stock Exchange, nice how we can just kind of soup to nuts cover the whole market here, maybe in segment number one, and we'll just take the rest of the day off. Keep resting the vocal cords here. Ain't nothing like about a food poisoning. But in any event, let's just stay focused here, Steve. As we take a look at panel number 2, one of the things you're going to notice at this stage of the game is that the advanced decline oscillator reading is at minus 173 and change out there. So if you can clearly see on TigerTV, your phone, however it is that you're watching us out here, you can see that I've got a minus 150 level and a minus 250 level. The level that's really important is the minus 150. When you get to, when the New York Stock Exchange and the advanced decline oscillator reading is nothing more than the advanced decline information. Take a look at the difference between its 19 and its 39-day exponential moving average of those numbers out here. Now, the cool thing or the important thing here is that, again, just trying to be non-emotional and just the ability to read, be a crystal ball reader, a tarot card reader, a stock chart reader. When you get down to minus 50 in the New York Stock Exchange, what do you notice that takes place? When you take a look at those green arrows, what is it that one should be on the lookout for? Exactly. Should be looking out for a bottom. Now, this is an end-of-day reading. We're not at the end of the day out here. Can you go below minus 150? Yes. Very much kind of like that TD setup, right? You get to count number 8. You pay attention. You don't pay attention, you're going to get fined. You're potentially going to get fined out there. And the same thing can happen here. When you get down to minus 150, the sphincter muscle for the bears should be tightening up right there. You got to be cautious. Not that you can't go lower, but if you're an odds maker, an odds player out here, there's a pretty solid chance that we're going to see some type of bottom today, tomorrow, Monday. Let's not try to be specific, but let's try to make sure that we're not traveling through the forest with blinders on out there. We don't want to do that. I don't want you to do that. Now, the interesting thing here, and just to show you how bullish the market is because of all the liquidity out there, New York Stock Exchange has basically had hardly any retracement. I mean, if I go from low to high, we're not even at 20% probably, right? So so pay attention. So now you've got two indicators. Well, and you're down minus 150. I'm not saying that the bottom is formed yet today. I'm saying be on guard. Be on guard out here. There'll be lots of reasons for buyers to come in and buy this market, just simply based on the information that you and I just took a look at out there. Okay, so what else is it that we can look at? And again, shorter term. Shorter term, we change to a different set of charts. When I like to understand what's going on inside the market, understand the emotion of the market, understanding how the markets form tops and bottoms out here, I always like to go see what's the Rhodes momentum indicator signals telling me. And for me, that just is a matter of going back and taking a look at just this little data model out here. Allows me to keep track of what's going on the 30-minute, the 1 hour, the 2 hour. I can set it for whatever time frame I want. But what you notice here for the equity futures contracts in the short term out here was that, and we had signals earlier, but if we just take a look at the signals right now in the 1 hour, the ES, the YM, Russell 2000 each have a bottoming signal. The 2 hour time frame, the Russell's been pretty weak too, right? We'll take a look at that. It's got it in the 2 hour time frame. So that always tells me, hey, go investigate what's going on out there. Where could the bounce take us to? Or has the bounce taken us above where it could? We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So a couple questions that have come in, one just leads right into what we were talking about, which was, what's going on with can we take a look at the Dow on a 60-minute and a 5-minute time frame? 5-minute really kind of pushes it, but we'll go look at it. So when we were going off the air, we showed this here, this little tool that allows me to understand what the markets are doing out here and when there may be topping or bottoming signals that are present. And we took a look at the 60-minute time frame, for example. It had 3 signals in the equity futures contract, and the Dow was one of them. So let's just pull over the Dow here, since that was the question that came in. And here you'll see these little black diagonal lines. So when the black diagonal lines begin drawing, that's when I start to get those signals, my alert signals out there. Sexy voice, really, dude? Thanks a lot. I appreciate that. That's kind of a sense of humor you got to have here. But so now these signals, whether or not they're important or not, well, I think they're important. And I just simply leave it up to you. And I want you to just pay attention to the bottoming ones, because that's what is present as we speak right now. So if I just get my crosshair out here, you can try to get the crosshair. So this is what I'm referring to, where we're at right now. You can see the last time that those signals began forming, we're at around noon, 11 o'clock in the morning. This is back on February 8th. And the question is, did the market go ahead and make a nice bottom then? The answer is obvious. It's yes. And as we pull these back, they're not going to be at every bottom, but when they do show up, you pay attention to them, and you want to learn and understand this pattern. Or if you'd like to learn and understand this pattern, you just have to become a subscriber at Maximum Probability. Here, if we go back to December 25th, 26 out here, you had that pattern forming. We know that that's been a significant bottom. So the pattern's worth. So if you're asking me, now let's go switch to the more noisy chart out here. That one was it's easier for me to maybe just show you that on this chart, so you can say, all right, there's reason to pay attention. But we have to investigate it more than just that. And so if we take a look at, because remember, look, I say what I mean what I say. Our role here is to really help us identify support and resistance, not just one thing for a market to identify a top or a bottom. It's okay if it does, is it of significance? We never know if something's of significance unless we see support or resistance fail. In this case here, inside the Dow, the first resistance has failed, and that would be the top of its 1-hour time frame profile. That's at 25,519. Now, during this hour, meaning 1 to 2, we've seen price come back and test Stevie's red line out there at 25,541. So if price holds that, where price should head up to inside the Dow is this solid green line. That's really the resistance line established by that 9 count that we looked at. That price point, by the way, is 25,704. Or maybe it's in that 25,750 type area as the move to the upside. So it could just be an entry, but this should help someone, especially if you're a day trader, or any kind of trader, just so you understand, what's going on and why, and the importance of when a market will top or bottom. This is my experience, pretty decent experience, but I'm not going to pat myself on the back. But the fact of the matter is that buyers and sellers, they've got just one role, and that is to give us signs, and those signs are easily discernible. They're called Japanese candlesticks, and they have a lot of importance at the end of a pattern out there. Now, what kind of pattern? Look, this is the Rhodes Momentum Indicator pattern. It's not the only pattern on a 60-minute time frame that's out here. You know that. You know that there's a Gartley buy pattern that, in essence, on a 60-minute time frame, that is the signal at this stage. Now, not every Gartley pattern or A to B equals CD pattern or Rhodes Momentum Indicator pattern always works out there. So, that's why you use stops and use money management. But there's clearly an A to B equals CD. You can see it on the chart. You don't necessarily need me to draw it. I'll draw it. Let me just get a larger time frame. Let me just do that. It's maybe easier to see on a larger time frame. What should I do out here for the larger time frame? I don't know. Let me just go to the 2-hour time frame chart out here. And so maybe that's not even, yeah, that's fine. This will be fine. So here's your Gartley buy pattern that's forming, or has formed, I should say. Really, and it made a 1 to 2 A to B equals CD. Now, I don't know if Tom is listening, but usually the Polar Bear is listening. And Polar Bear, you probably can go to the page of Tom's book, The Art of Timing the Trade, and somewhere on one page out there it says when you do a 1 to 2 A to B equals CD, pretty good chance that you've just completed some type of pattern out there, in other words, or there's going to be some type of change in trend. So if you were just trading the 60-minute or 120-minute chart out there, you should pay attention out here. Again, we've identified some levels of resistance. So here in the bigger picture out here, again, you just may want to have some stops in place or adjust your stop. A lot of time left in the trading session out there. Okay, so we've covered the spot volatility index, New York Stock Exchange, an intraday chart. Do we take the 5-minute chart here? If we just take a look at the 5-minute chart, what's it doing? So the 5-minute chart says, and here you've got the 9 counts out here, says we had a 9 count that identified a short-term top. Now we've seen that pull back into potential support out here. See, that was exactly at 1 o'clock. If not, price can pull all the way back to the bar at 1235, 25,452. And there'd not be really anything wrong potentially with this little counter trend rally, or the rally could be over. But that's what the 5-minute chart is. If you're a 5-minute time frame trader, stay with the 5-minute time frame. And if you're 60 minutes, stay with the 60-minute. Kind of understand what's going on, but make your decisions based upon the time frame that you use to get into the chart. Kind of like John in Sarasota, and then thanks to both of you guys for some well wishes out here. If we take a look at silver, now his question was about the ETFs for silver, and John, for your purpose, I'd rather just look at the futures contract because I'm not going to get the same clear message as I can inside of silver. So we were looking at the transports. We were looking at the transports. And we saw that the transport, similar chart pattern to what we're looking at here in silver, and that you've got that 9 count, that Tom DeMark set up 9 count. Looks like today will be number 9. Now, the 9 count, whereas the transport we're testing support, this is actually coming down before it even gets a support. Again, support here, because this is the tool that we're using. I'm not using market profiles or anything because market profiles don't have anything to do with the Tom DeMark set up 9 count out here. Not that we shouldn't use them, but at this stage here, we're getting close to what it would appear that silver is going to have that chance for reversal. Whether it takes that or not, I don't know. If you look at the last time silver had made a top back here in, you get a crossbar back here on January 4th, you get the 9 count, you get the high, and you had a nice move down until silver formed the 9 count and hammer candle on January 22nd. And so saw the rally from there. So, John, if you're asking me what's silver doing, you already know. You know that silver has a potential to form a bottom today. Today could be the bottom. Maybe it's tomorrow. And if silver dips below, moves below either the low of today or tomorrow, meaning Sunday night, Monday, then you've got to look to see if this support line holds. What's that support line? That's from December 24th. It's 1481. Below that, silver's going all the way back down to the lows. Now, right now, looks like it's forming a bottom, trying to form a bottom. I'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we've had a couple of requests. One here from the Tiger's Den. Peter in Park City want to take a look at gold and all the currencies. And Peter's right on top of this because I know most people would be taking a look at the big move inside the euro, which obviously is going to put a big move inside the dollar. Dollar's up 59 pennies, straight out 96.90, and say, man, this is pretty cool. Gold's holding up pretty well. It's only back $1. Why is it only back $1? Well, you know, what you have to do is you can just realize that, as Peter knows, is that we're not the only ones buying gold or selling gold. Not the only one. You've got a lot of brothers and sisters and cousins and so forth that are over in Europe or over in Asia that are also buying gold, or India, or just simply go around the globe. Now, what Peter and I do is we just simply take a look at gold expressed in the major currencies out there. And the major currencies being the euro, the yen, the pound. I can only put so much on my screens out here before we're just, it's crowded enough. But if we take a look at why is gold in dollars not pulling back? It's really kind of flat, right? Well, and you expect it to move lower because the U.S. dollar index is higher. Why? Why would you do that? Doesn't make any sense. You want to just understand what buyers and sellers of this metal are doing around the globe. And if you're over in Europe and you heard Mario Draghi do what he did and you saw the reaction to the currency out there, you can see that gold expressed in euros is moving higher. Are they sellers? Are they sellers of gold in euros because the U.S. dollar index is getting stronger? No, of course not. If we take a look at what's going on with the folks over in Japan, slightly lower. Take a look at the folks that are sitting over in the UK right now. If you're sitting over in the UK, are you saying to yourself, based on what the ECB did, or based on the fact, hey, look at that U.S. dollar index go, I ought to just jump on the short train for gold out here? No. The reason why gold's not moving higher or lower to any, we've got to realize we're all sort of connected here. Luckily, you're not connected by the same food chain that I had on Sunday. And really, I've been dealing with this whole throat thing. It's all about food poisoning, pretty nasty food poisoning. Kind of like one of my favorite movies out there is Wedding Crashers. Any of you seen the movie Wedding Crashers out there? I remember the first time I saw it. Laughed my butt off. And there's that scene in there. What's his name? Bradley Cooper, right? Vince. Well, it wasn't Vince Vaughn, but the other guy that puts those drops in Bradley Cooper's drink, what have you. Gets sick as can be and is just hanging out, at the porcelain ball for half a day. That was me. Right as this show was ending, I couldn't make that last segment, the 2-minute warning, because I had the 2-minute warning. And but any event, so if we take a look at gold out here, it's just a matter of gold's not going to do anything one way or the other until it's moving in the same direction in all currencies out there. You got to have buyers in all currencies. You got to have or buyers or sellers in all currencies out here. And so this is what we have that's going on inside of gold, not moving much. Does it mean anything with the mining sector doing what it's so here's what we do know with regard to silver, right? Looks like it has the potential to be making a bottom just because of one simple pattern that we look at. If we look at the April gold contract as well, what we're going to see is today looks like it's going to be a ton mark setup 9 count out here. So what I'd rather you do is, and it's well before the support line of that red dashed line out there. So it says we should be on guard for a bottom in gold in dollars. Whether that is today or tomorrow, we should be on guard. It should stop. If it doesn't stop, it really tells you about the momentum to the downside. And in the case of gold, what you're looking at is a price target now, 1244.90 out here. So you got the same pattern in silver that we do in gold. And then all you really have to do is, if we start to see a bottom, one thing is certain. We will start, and if it's a bottom that is a valid, worthy bottom, we will see gold move higher in dollars, euros, yen, and pounds. So that's anyway. So Peter, I hope that helps you out with regard to what gold is doing in all the currencies. You were asking about the market profiles out here. You've got a new profile that's trying to form, trying to get legs out here. A daily profile, that is. And the low of that is at 1286. Now, the low of the weekly profile is at 1288. And the top of the monthly profile is at 1287. So you kind of put that together with what we just looked at as far as the gold contract on a daily basis. And gold's really got the opportunity to form a bottom here. This should be great support. Another reason why gold isn't really doing that much, right? It's not doing that much in dollars as far as a pullback. Why? It's at significant support where buyers are lined up in dollars on a weekly chart, where they're lined up where they're lining up now on a daily chart, and the top of the box hold resistance as new support on a monthly time frame. Give or take, we may be $1 or $2 underneath it on the $1,300 instrument. No big deal out there. So if it doesn't hold here, it really tells us, it tells us to look for the next target, the next level of support underneath. And if it does hold here, and if this new daily profile does form to give us a change in trend, well, then what we're looking at would be a move above 1296.30. Now, I don't know if this profile is going to hold or not. It's been floating in and out all morning long, but right now it's there, and 1296.30 would be what you would want to go ahead and take a look at. Now, with regard to we've spoken a bunch about some of these support levels out here and support or resistance. So that takes us into, or should take us into, what are the markets doing? Give me an overall view of what the markets are doing out here. And to do that, let's switch to this chart. This chart takes a look at the equity futures contracts. You'll notice the symbols, or maybe you won't notice, but I'll tell you that the symbols are not the typical symbols that you would see. And that's because this is because we've had the rollover of the contracts. And so I'm using my composite or my synthetic symbol so that I've got all the historical data that I can use. And this way allows me to generate a really strong, solid, reliable market profiles for us to look at. There's only been a change in trend. So here's what we know. The ES mini, you're underneath the point of control at 27.58, 27.53 on a daily basis. It says sellers should be able to push price to the bottom, 27.10. That's what it says. Inside the NQ, though, if that's going to happen, the NQ has got to break. What the NQ did today is test support. Now, the cool thing about what the NQ did is it's really close to 70.21, by the way, support. We've been down to 70.25. Okay, it hasn't hit exactly 4 points. That can happen so fast that that's no big deal. So in essence, it's tested support. Russell 2000 cracked below support, closed below support. So Russell 2000 is saying there's a change in trend underway, or should be a change in trend, at least for it. We don't have that signal from the ES, from the NQ, or the Dow out there. So what's it going to be? Just a change in trend or not? Or is this a rotation out of the small caps into the NQ or the ES or the Dow? I don't know. Only one of these indices has broken through the key level of support. Let's watch the NQ, 70.21.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're taking a look at right now the chart on the screen. Bob, it was not bad sushi. Thank goodness. And there was no sake involved. Thank goodness. So no food poisoning there. So that's good news. But no plans for the alcohol real soon here, not until we get over this nasty, nasty throat. So the euro US dollar, Peter was asking about this. We could take a look at this and the yen. And the question was for support. And what's transpired so far this month, I've got a monthly chart, Peter, so you take a look at a larger time frame. As you can just see you can clearly see the trend line, the rising trend line that has been broken. Now it's early March, right? So if price continues lower, doesn't get back inside the trend, then the longer term target for me has to be the lows from 2016 in the close to the buck range. The lows there 1.03. So as of 1:43 in the afternoon on March the 7th, 8th, 7th, what we can see out here is that price is broken through that. Now, that's a monthly time frame. If I put on like weekly profiles, that's what pops up next. We're below that. That was a bullish structured box. Nothing more bears. You can see the descending trend lines on that. So it says it looks like the euro wants to head lower, the dollar head higher. All that makes sense. We're going to see when everything really does kick in, we're going to see the dollar move higher, gold move higher, the Dow move higher, all the U.S. stuff. We are the game in town. As long as we're the game in town, we should be playing. All right. So we look for the daily time frame out here. Daily, you've broken through a simple little trend line out there with regard to the euro. Now I've got a 15-minute delay on this chart here because I'm showing the currency pair. But we kind of support. It's broken through support, and over the longer haul, looks like it is headed down to much lower price, and that $1.03 over the long haul. You also want to look at the Japanese yen versus the U.S. dollar. And so if we take a look at it, and here's the daily time frame, Peter, looks like it's headed towards this descending trend line out here that was established by the highs from October, and then the highs again here in November, and then looks like in the end of November out here. So that's in this range of $1.13 or so. We're at $1.11. And some change out here. So it looks like the yen wants to move higher out here. Looks like the yen wants to get weaker, and the euro wants to get weaker, and the U.S. dollar index wants to get stronger out there. So that's what I see, Peter, when I take a look at that. Hope that helps you out. That was just the daily time frame when we took a look at the euro out there. I had a request in here. This is from Michael P. Mike wants to take a look. He's got in a little rocket ship, and he wanted to go take a look at that rocket ship. And the ticker symbol here is Mike must have some inside information. I'm just kidding you, Mike. He is in a ticker symbol BPTH, Biopath Holdings. Now, talk about a rocket ship that maybe ran out of fuel. I don't know. This thing, is this really true, Mike? Yeah, it went to 73, now at 32. So I don't know what they cured out here. So with the Japanese looking to go through 113, we'll go not move much until it finishes. I don't know. It'd take it one day at a time, Pete. More in increments than as opposed to the bigger piece out there. I think to summarize it, what we know about gold is that the pattern in silver that's in play is a possible turning point, and so we should just be on guard for that. And I was looking at the daily time frame charts, and then we just simply continue to see how gold each day is performing. If it does form a bottom, how is it performing in each of those currencies out there for a guide to make a determination whether it was a bottom of significance, if it is a bottom. In the case of Biopath Holdings out here, I don't know what they did. Look, this thing was trading at $2.50, $2.60 just a few days ago. When I say a few days ago, March 1st, $2.65. $2.65. That's what it's trading at. And right now it's trading at $33. It's a pretty heck of a move there, Mike. What are you asking me? I know you're asking me thoughts. How does anybody have thoughts on something like this? I don't know what they cured. I don't know what they did. That's one heck of a move out there. Does anybody in the den know how to read this chart to help Mike? I mean, this looks like this was a reverse merger of some sort. So I don't know. I mean, there's nothing on the left-hand side of the chart that I would consider to be valuable. The chart really didn't become valuable until March the 1st out here. And, you've made some pretty good money. At least just put a stop in place or something. So I don't even want to look at the profiles and use that for anything out there. I don't know how to evaluate this stock, but you've made some nice bread on it. And but any stock that's gone from 250 to 72, I suppose can go from 72 to 250 out there. So there's no technical thing that put this thing to the moon. So I don't know anything about it, but it's a biotech stock, so anything can happen. Okay, PETS is another request coming in, and the question is, where would you buy on PETS? That's Pet Med Express out here. PETS. Well, you wouldn't be buying today. That much we know. Just simply daily, weekly, monthly profiles. Stephen, this thing is down below all kinds of support. So we don't see this. If I look at my other chart out here on a daily chart, no bottoming signal just yet. So what it looks like it's going to do out here is either test or bust through this high volume low. Chances are it's going to test it. Trading inside this bar looks awful lot like the stock that we looked at for Michael P. This day here for this equity, this is the day when I say the day was January 22nd, and this thing went from a low of $20 up to a high of $23. Now, not the same gargantuan 250 to 72, but the candle itself kind of looks okay. And so it looks to me like, pay attention to 2025. If it's a test on light volume, go for it. So, hey, Tony, when we get back from this breakout here, we'll have 2 minutes. So stay on the line. I see that you want to take a look at Costco. We've just got about 20 seconds before we go to break. So I'll go ahead and get the charts ready for Costco. This is Tony in California who's calling, and we'll go live to him as soon as we get back from this break. And we'll just have that 2-minute countdown. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Nico DeHaan and Paige Clark have launched a special for a limited time only. Save 25% off Primal Edge and Health Signals. Just use promo code HEALTH for Health Signals or use promo code PRIMAL for Primal Edge and save 25% off instantly when you sign up. All the details are available on each order page at TFNN. Certified personal trainer Nico DeHaan's newsletter Health Signals comes out twice a month and is packed with great information on health, fitness, and diet. Primal Edge is specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox, and contains a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form. This sale won't last long. Sign up now using promo code HEALTH for Health Signals or PRIMAL for Primal Edge and save 25%. For all the details, visit the front page of TFNN.com right now.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
All right, let's go out to Tony from California. Tony, thanks for calling. So how can I help you in Costco?
Costco is giving earnings today, and for me, it looks weak. And it should go down. That is what I think. How about you? How do you see the chart?
So, and when you say weak, what is it that that you're looking at that suggests that it's weak?
It's according to me, it is falling on the volume, and I think 210 is quite possible here.
So 215.72 is the bottom of a new profile. So it'd be one level of support, and that's a new profile that formed yesterday. I agree with you that it's struggling to get through the downdraft area that formed on December 14th. Now maybe that was a prior earnings release there, and on or the following day. Most likely. So probably the earnings was on the 13th, and then the reaction was on the 14th, and capped down with 8.8 million shares. And that's at 219. We're trading at 217 right now. And this is the area where it really struggled. Now, so the downside, so I agree with you on the weakness aspect, but weakness from the standpoint, it just doesn't have that volume yet to push through that group of sellers. As far as 210 is downside action, I would say if it closes below 215, then downside action is like 207. So let's not worry about $3 out there. So I see that. Are you planning on playing it that way, or you're just trying to get a feel for what Costco might do?
I'm trying to, go to, small size play here, but
Okay.
kind of, it's exactly where, risk and reward is kind of not in favor.
No, I would sort of agree. I'd like to see some other kind of weakness. The only other thing I'll just leave you with is that yesterday was wave number 7, letter G. And oftentimes where you're going to see some significant changes in trend is when you get to that 7th wave. So, hey, thanks for calling. Thanks for holding. Best of luck. And we'll look forward to talking to you soon. Folks, thanks for being here, putting up with my voice. Stay tuned. Your favorite polar bear's up next.